Hello, this is the trade site U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning really Tuesday the 20th, ending Friday the 23rd of February 2018. Monday is a bank holiday for President's Day, so we will not have the market open on Monday. Here's a look at the ES front month futures contract. It's the daily chart of the broad market futures form. We have bounced back at least halfway here from the drop, so we got the 50% fib retracement handled. But again, remember with options, like a lot of people buying puts on the panic as we were selling off, and then the floor wants them to expire worthless, so they got that. So now that the options expiration is over, we'll see if we get the second leg. Just so you know, usually when you get drops in the market that are big ones, they start like this, and then you get a bounce around options, and then either they collapse around the options expiration weekend because there's no protection, or you get a pause while the floor guys collect their money, and then you go again after. So it'll be really interesting to see what we get once we're done here. Here's a look at crude oil, up 35 cents to 61.52 after that 13 sell signal was right at the high a couple weeks ago. Gold down $7.20, but it did basically sweep all-time highs. You got a cup and handle formation for gold. You got the S&P was up 1. Remember, you're not usually going to do much on an options expiration Friday in February, and we did not. S&P up 1. NDX was down 24, so at least a little movement there. SOX was down 4.63. Doesn't really matter. The biotechs were down 13.03. And again, that's not really much of a move. The VIX up 33 cents back to 1946. The trend closes at 1.19. That 10-day moving average still up above that because that big number at 3.5 is still in. But I think 1, 2, 3, 4, 5, 6, 7, 8. I think that's about to drop off on Monday. NASDAQ volume was only 2 billion shares. What's really interesting here is that usually for options expiration, you get some fake volume. So it's usually a high volume number. It was Tuesday was light, but other than that, this was the lightest volume day of the week for expiration itself. Very unusual to see that. NASDAQ volume, our NASDAQ advanced decline ratio was plus 300. New York advanced decline ratio was plus 571. So some positive breath in the market for the first time in a while. Google gains back $4.14. Apple loses 56 cents. Not a big deal there. Amazon down 13.07. Remember, this thing's almost back to highs after the dip. Amazon's the one to watch, but we're still operating under that 13 sell signal from back a couple weeks ago. Netflix down $1.75, but very near highs. Tesla up $1.43. TLT, the 20-year bond ETF, gained 64 cents off the lows. Goldman Sachs down literally 6 pennies. Not a big deal. Here's a look. Let's do the whole week. Let's change this to 10-minute candles and take a look at the whole week on the ES. And it was, so you can see last Friday way back in the distance. Monday, a small gap up, filled the gap. Or I think we missed it by a couple ticks, actually. Tried to go higher and closed about where we opened. Tuesday, gap down. Basically a flat session. Wednesday, gap down and headed higher. Thursday, gapped up, filled the gap, and then went back up a little bit. Friday, dead flat and closed about flat. Net for the week is a decent move up on the S&P of about 80 points. We got the NASDAQ side. Again, look how flat Friday was. It's just a very strange week overall. I don't know. Again, bouncing off the lows, but again, a lot of it was options expiration related. So I don't think it was. We'll see what happens after this. This is going to be the key here is this next week. If we roll again, the bullish bearish sentiment was still very bullish. That's a negative for the market. If we roll again, look out because if we crack these lows, it's not going to be pretty. Let's take a look at the economic data that's coming out this week. It's a short week. Monday's a bank holiday. Like I said, Tuesday there is no data. So Wednesday we've got the flash services and manufacturing PMI numbers at 9:45 a.m. Got existing home sales 30 minutes into the market. We released the FOMC meeting minutes from the last Fed meeting at 2 p.m. Thursday we've got the unemployment claims. It's the initial and continuing numbers an hour before the bell. CB leading index 30 minutes in. Natty gas an hour in. Crude oil inventories an hour and a half in. It's on Thursday instead of Wednesday because of the holiday. And then we got the Fed monetary policy report. We got a lot of Fed member speeches too. Not that that necessarily affects the market. So it's a short week. We'll see what we get. Nothing of our major economic data. No big advanced or first look at GDP. No Fed announcement. Just a straightforward trading short week. Remember that Tuesday, first day back, is not only the first day back from a holiday, but first day back from the options expiration. So Tuesday could be a little light. We'll see after that. I would expect Wednesday and Thursday to be the better trading days of the week. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.